Welcome to the 2024 Economic Depression Channel. I'm your host, Tony. Thank you for joining me on this Hump Day Wednesday edition, July 10th, 2024. Appreciate everyone tuning in for this brief episode here. As you can see, the Fed Chair Jerome Powell, we're going to talk about his meeting that he had with the House Finance Committee and what he talked about. The employers are adding jobs. They added 206,000 jobs in June and July, but as you know, these things are winding down. And we're also going to talk about how the immigration surge, according to one report, media report, it actually hadn't added to the inflation, according to this report. Do we actually believe that or not? We have to wait and see. This economy is doing great in terms of some people's estimates, in terms of keeping up with, job creation and wages supposedly, allegedly, are keeping up with inflation. We don't see that in the majority of states here, that the people who are employed, that the wages are keeping up with inflation. Inflation is double what the wages are, but it at least appears that way and with the numbers, at least for now. So we'll see what happens. Gold and silver were up, cryptos were up. And the Dow Jones and stock market levels, they were up today currently as a result of possible Federal Reserve rate cuts that are going to be coming. Helicopter money could be coming. Quantitative easing could be beginning here as Fed Chair Jerome Powell testifies against the House Finance Committee that he believes, quote, that low unemployment and low inflation is still possible in a post-pandemic world. That's the plan, quote. So he still believes that he can get down both inflation and keep employment jobless claims down, as we continue to see jobless claims kind of rise, and that the media not reporting on it that much. They're more reporting on, the prices of gas and stuff like that rising, which most people already know that gas, food have been rising ever since before the current president was in. Last time we had gases under prices that were cheap was when former President Trump was in, and it was like $1.90, $2 a gallon, if that. That's the last time we had somewhat stable gas prices, at least in the short term. Not a political channel. I'm just saying that's the last time that we had cheaper gas prices, that were actually affordable for the majority of Americans. So now we don't have that. The average gas price is close to $3.70 a gallon for unleaded, according to AAA. And now the Federal Reserve Chair, he's telling the FOMC, which is the Federal Open Market Committee, that they will continue to make decisions, quote, on a meeting by meeting basis. So basically, they're thinking about cutting rates sooner rather than later. And like I said, I've been telling you guys that we've been thinking about the rate cuts in November, December after the elections, but we may get a rate cut sooner now than that, because right now they want to make things look good before the elections, obviously on both sides of the aisle, Democrats, Republicans, Independents, but also because the economy's at a state right now that he thinks that they can go ahead and cut the rate as things are going to be looking up. He says you don't want to wait till inflation gets all the way down to 2%, because inflation has a certain momentum. You wouldn't want to wait that long. If you waited that long, you probably waited too long, because inflation will be moving downward and will go well below 2%, which we don't want. In other words, they don't want deflation to happen. And that's another thing, too. If they would have naturally let deflation happen years ago, instead of after 2008, instead of automatically keeping the interest rates at zero with all this helicopter money, then maybe the pain would be less palatable for all of Americans right now. But since they didn't do that, now we risk going into a hyperinflation before we go into a deflation, and that's going to basically mean a severe recession that could last longer than 2 to 5 years. So that's what we're looking at. But right now they're saying that listen, we're going to go ahead and fix these numbers, doctor these numbers up, and you can expect rate cuts. And that's why the stock market is surging right now. It's going to be surging again as we head into August, because they already baked in a couple of rate cuts that the Federal Reserve Bank is going to be doing, and they already know what the Federal Reserve is going to be doing ahead of time before they release it to us and the public. They already know, a couple years in advance or a year in advance what they're going to do anyway. So, but employers added 206,000 jobs, like I was saying, in June. This is U.S. News. Slightly better than forecast. See, the news spins it like this. They say slightly better than forecast, but it just means that we're flatlining. We're not to where we need it to be with the amount of people. Think about it. We just went out, the college graduates have just graduated in STEM fields and all these fields, right? Just last month in June and May. We also had many people retiree and doing career changes in the summer, because the hiring picks back up again after, in the fall, late fall, for a lot of these companies. So, we should be seeing more hiring and more things, but we're not seeing that. And that's the sign of a slowing. It's just a big time slowdown. You can testify to this. Many of you guys can testify to this, that it's taking such a long time to find a new job. For many people who are looking for a new job, or second career changes, or a gig economy, it's taking a longer time, than what it used to be 25, 30 years ago. You would, get a job, and let's say you want upward mobility in the way you're at, you would quit and get another job within 2 months, maybe a month, if that. Now it's taking 6 months, a year, possibly even longer just to get a basic job, So let me know what you think about that in the comments as well. What are you saying about the labor market? And what are you saying with trucking and manufacturing going completely away in America? Now, in the market watch, immigration surge continues, has bolstered the economy, generated little inflation, regional bank finds. So they're saying in this article that today that immigration surges, meaning people coming over here, whether for asylum or whatever the case may be, has bolstered the economy. It's helped the economy. I would agree with that to some extent because they do work under the table, and a lot of stuff is off the books, and they do they work hard. They do a great job. Majority of immigrants that come over, but they say it's generated little inflation. Not too sure about that. Inflation is generated by corporations. It's generated by continuing to spend money on unfunded liabilities, and that can include things like spending money on other things for other countries or other people that necessarily don't have your best interest in mind. But so that also is the problem. So right here, yep, same thing. They showing a job fair right here in New York back in June for refugees and asylum seekers, organized by Nikia Kolas, associate professor of fashion design. So hey, this is all good. This is great. But the bottom line is that this is a scarcity problem for all Americans, whoever, regardless of how you got here. We're going to be facing a scarcity of resources, of valuable resources like land, food, water, oil, electricity. You know what I'm saying? If there's a blackout, forget about crypto, forget about gold, forget about all that. People are going to be thinking about survival. You know what I'm saying? If there's some type of long-term grid down situation, or even just a regional grid down situation, people are thinking about survival. So this is not going to matter. What's going to matter in the future is, who has the resources, who has the natural resources, who has the know-how to be able to survive a long-term situation where you may have different things thrown at you in different parts of the country. So that's what's really going to be mattering in the future. So our job as citizens and as people who are here in this country, regardless of how we got here, is to prepare, prepare physically, spiritually, emotionally, and mentally, because everything is temporary. Inflation was supposed to be transitory. It turned out to be a little bit longer. Okay. We're supposed to go through the health crisis. That was temporary. It lasts a little bit longer. So one day you may be having a bunch of money. Next day you have zero in your bank account. So it's temporary. We go through life in phases, and that's why this business cycle that we're in, it goes through in phases. And so far, we've been able to avert a depression for the last 95 or 96 years. But listen, we're getting closer and closer to that date. Not just us, but all Western countries, whether it's UK or the ECU, European Central Union, or Australia, or all these countries are hurting. It's not just one type of depression. This is going to be a worldwide change of a system, a change of monetary system, a change, a depression worldwide. So people say, I'm leaving the United States, I'm going somewhere else. That's good. You can do that. But just realize that this is going to be a worldwide thing. Everybody's feeling it. There's people paying high prices in Europe for food, shelter, utilities. People paying high prices in Asia and in South America and Africa and Oceania. People paying high prices everywhere because it's the same system. It's just different type of, they call it different names, but it's the same system. And, the 1% are everywhere. The top 1% are everywhere, and they control most of the resources, land, wealth, and resources in the world. And so this is what we're facing here. This is 100% truth on this channel. I don't pull any punches. Don't preach to me. Thank you for listening to me today. I appreciate your support, and get some rest and health. And let's try to finish this week strong, the remainder of the week strong, wherever we may be in this world. Thank you very much. I'll see you on the next episode.